I'm Bryce Norris, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for April 17th, 2013. Market analyst Paul Bergner joins me with his views on prices that are unsettled at best. For better or worse, the grain market lately has traded mostly its own fundamentals of supply and demand. But outside influences intruded on our world of agriculture over the past week. First, gold prices suffered their biggest loss in 33 years. Then the bombings at the Boston Marathon reminded us about the world we live in today. While the bombings didn't seem to damage investors' confidence, the breakdown in gold appeared more lasting. Lower growth in China reported over the weekend added to worries about a slowing global economy that were confirmed by the International Monetary Fund, which this week lowered its forecast for both the world and its largest country, as well as the U.S. Consumer Price Index data out in the U.S. showed inflation under control, despite the country's budget woes and massive monetary stimulus. Gold bugs holding the precious metal finally realized that Weimar on the Hudson or the Potomac wasn't ready to happen just yet. Crude oil prices also broke sharply, and the softness in these markets appeared to hamper the rebound in the grain market that tried to get going after last week's generally friendly USDA report. Just how serious a threat to the rallies are these outside market forces right now, Paul?
Well, I think these rallies are maybe not as strong as we'd hoped, so there is some concern. And I think anything that makes the markets or the traders nervous out there has to have an impact. Although even today we saw a fairly significant drop in the markets, and it looks like that the commodities markets chose to trade weather as opposed to trading the outside markets. So there's some hope that the commodities markets will take care of themselves and let the stock markets make their own trades themselves.
Corn prices did stage a late rebound on Tuesday, with cold, wet conditions across the Corn Belt starting to raise concerns about planting delays. While traders didn't think much corn was planted last week, USDA's first crop progress report for the nation showed only 2% in, with virtually nothing done in the 3I states. Another big storm this week is bringing rain and in some cases snow, with flooding possible in the Mississippi River Valley. Only a few months ago, that region, of course, was suffering from historically low water levels. Forecasts for the next 2 weeks call for below-average temperatures to continue and perhaps a drier trend in some areas. As for old crop, exports remain weak, but ethanol production last week, though down, was still better than average. December futures so far is held above the 525 line in the sand we recommended for another sale. Do you have some upside targets in mind yet for adding to sales, Paul?
No, I do think there are some opportunities out there. I'm looking at somewhere in that 560 to 575 range, depending upon how much you've already got sold and where we're sitting in that. As we look out there, I realize we're only 2% planted, but we're not terribly far behind. And if you take a look back, say 2011, we started slowly, but we still managed to get very close to prospective plantings number. I realized we were only going to plant 92 million acres that year as opposed to the 97 million this year, but we did get off to a slow start and we did get there. The moisture in the western part of the Corn Belt, though, looks to me like it's stepping up a little bit. Could be real good news for corn. I'd be willing to price a little corn to make sure I've got a floor under me there.
The Midwest's soggy weather raised concern that more soybeans could be planted this spring, keeping new crop November futures on the defensive. But old crop futures held their move above $14, with May building its premium to deferred contracts. Crush for March, reported by the National Oilseed Processors Association, was down from 2012, but the year-to-date total is almost 7% higher, while USDA's updated forecast from last week still shows a small decline. The break by November forced us to recommend pricing another 5% of new crop production as a purely defensive measure, bringing total sales to 25% at an average price of around $13. What about old crop, Paul? Is it time to pull the plug on remaining inventory?
Well, we knocked on the door at 1430 today, and we've got strong basis out there. This could well be the time to go ahead and move kind of those remaining inventories out there. There may be some upside yet out into later into the year, but that always comes with some risk. And so I like the opportunity to sell beans somewhere around 1450 cash, which has got to be about where we're at now.
Wheat was the first market to break hard this year, and it's showing signs of trying to be the first to turn around. While crop conditions stabilized this week, conditions on the plains remain tough, with another hard freeze threatening Kansas into Friday morning. The snow hasn't started to melt on the northern plains, which could see more flooding as well this year. USDA reported no spring wheat seeded last week in either North Dakota or Minnesota. End users, meanwhile, appear to be holding their fire. Libya bought a little wheat today, but Jordan canceled its tender. Yet again, while supplies in Egypt have slipped to just a 71-day supply. Conditions appear to be improving in Western Europe, but yields could be off from there into Russia, with dry weather still a concern in the southern hemisphere too. How long do you think farmers should give this market, Paul, before adding to sales?
Well, I'd like to add to some sales if I knew for sure that I had a crop, and I think that's the piece that's a little disconcerting for those guys in the plains. The stuff in the north is under some snow. The south is facing drought, and now we've got another round of frost coming that way. So, with a crop that's late heading, we're about 4% headed right now, down from typically 12%, and a spring wheat crop that's late going into the ground at about 6% right now. I think that there's definitely some opportunities. I wouldn't mind selling a little bit at the prices where we're at if I'm comfortable. If I'm sitting in the Midwest and I know what that crop looks like, I've got good moisture there, I may be more willing to go ahead and do some pricing. We're in some fairly attractive places for a little bit more sales. In the other places, I'm waiting to see if I've got a crop before I get terribly excited. If I'm comfortable, let's put some on the market.
Well, thanks, Paul. It's a changing market for sure. Be sure to subscribe to Farm Futures Daily to make sure you're receiving all of our comments and recommendations. And then we'll be back next week with another edition of The Buzz.